2022 was a turbulent one for the economy. In an effort to curb inflation, we saw the Federal Reserve hike interest rates at the fastest pace in decades. We're joined now by Chief Financial Analyst for Bankrate, Greg McBride, with some insight on where the rates could land by the end of 2023. Good morning to you.
Good morning. Great to be with you.
We're glad to have you looking into your crystal ball. People didn't really expect what we saw out of the Fed last year, so let's go ahead and pretend this is a day in 2024. What do you think will have happened over that 12-month period?
I expect that with first half, it's going to be a tale of two halves, essentially. That in the first half of the year, we're going to see interest rates going up. We'll see the Federal Reserve continuing to be active. But then in the second half of the year, the Fed will move to the sidelines. The economy will probably be weaker at that point than what we have, at the beginning of the year. And so longer term interest rates, things like mortgage rates, for example, those will start to slide. Even longer term CDs, if you're a retiree looking at a 3-year, 4-year, 5-year CD, I think those are going to peak here in the next couple of months. And so by the time we get to the end of the year, I think some of these rates are going to be lower than where they are now, but it's going to be almost like a hump. Some of these rates will go up for a while and then start to go down. Others will just plateau. Credit card rates, home equity lines of credit, they'll go up and then they'll likely stay up.
So when you're talking about mortgage rates sliding, you mean if I'm thinking about buying a house, I wait till later in the year?
Well, I don't advocate, buying a house based solely on where mortgage rates are any more than I advocate getting married because there's a sale at the bridal shop. You have to consider a wide variety of, your life circumstances, affordability. And affordability is a real issue. Mortgage rates will come down later in the year, I expect. It may not be enough to have a material impact on affordability. It'll help a little bit if you're close, but it's not going to suddenly put things back into your price range that were there a year or two ago.
Alrighty. Now, recession is one word we heard bantered a lot about last year. Some people were very convinced we were already there. Other people said this, and that indicator show that we are not. Where do you think we are, or if we're still headed into recession?
Well, about 2 out of 3 economists are forecasting a recession at some point in 2023. I do agree with that view. The economy's been very, very resilient. And I think the economy is stronger now than was expected. But I do think in the second half of the year, weaker economic environment and a likely recession are possible. But the thing about that is, a lot of times you say the word recession, the muscle memory kicks in. People immediately think 2008 or stages of the pandemic when unemployment spiked to 14%. I don't know anybody who's forecasting a recession that's anything remotely close to that.
Well, that is very, very good news. And before we let you go, given what you think is going to happen with 2 out of 3 economists saying we're heading into recession, and given what you see the Fed doing this year, most important, number one thing we should be doing with our money right now?
Pay down that credit card debt and boost your emergency savings. I think those are really the 2 things that will help you better weather uncertainty.
I think with the storms that we've just had, so many people in the dark thinking about generators and all that stuff, emergency savings is very much on the minds of folks around our region. Thank you so much for your time this morning. We appreciate you.
Thanks for having me.